Good morning, everyone. This is Doug Campbell with the Right Way Options morning market prep video for June 16th, 2017. My goodness, we have had quite the back and forth market, and I think a lot of us are probably glad it's Friday. The chop has been extreme, and particularly in the diamonds. The diamonds has been flipping back and forth in large range moves intraday. If we look at a short-term chart, you can see our gap down yesterday, right here. We whipped up and whipped back down. These are like 50, 60 point moves here, and then rallying back up finally here to maintain the trend of the diamonds. And what we're experiencing here is quite a lot of that whip, and it makes it very challenging for a trader, swing trader, to make money in this market, because the only thing we can do is widen up our stops or reduce our trade size, and that would be my suggestion. If you do decide to trade, if you do find something to trade, and there's no reason not to say, look, the diamonds are bullish. Okay, it's maintained its trend. There's no reason not to trade. Overall trend is still up. We should be trading, but we have to recognize when the market is bringing us more risk every time we put on a trade. So my recommendation is, if you do trade, trade small. Don't cut your position sizes in half. If the market settles down and settles into a nice trend, then we can add to those positions. But there's no reason to just allow yourself to continuously be chopped up thinking that the market is the same, that you can risk the same and trade the same way that we could just a few weeks ago. It's time to curtail your trading a little bit, pull back, sit on your hands a little bit more, and just take a little bit less risk until it sorts itself out. If we look at the SPY, now the SPY has been even more challenging, and if you look this really whippy day right here, if you look over there in the left corner, you'll see that the high of that was at 245.01. 245.01. The low of that candle was at 241.95. So essentially 2 points. A 2-point whip back and forth, and we've been there for 10 days. 10 days whipping back and forth. And then also notice that we have been really favoring testing both sides of that almost daily. We whip down and whip back up and whip down and whip back up. That makes it very, very difficult to make money as a swing trader, and it makes it very dangerous because stops are getting tripped on a regular basis. So pull back. It's time to wait for the market to show us something, wait for the market to give us a little bit more of an approval to move forward. Now, as of right now, we have futures on the diamonds showing bullishness. But look what's happening here on the SPY. SPY closed up here yesterday. It looks right now like it will open here. So another gap at the open, another whip, and I don't know what that's going to mean for the rest of the day, but I got to imagine that, well, I just have to stay with the fact that we've been whippy every day, so why should that change today? And I have to plan my day around that whippy price action. So on the economic calendar today, we have housing starts at 8:30. We have consumer sentiment at 10 a.m. and we have a Fed speaker at 12:45. That's really all there is to worry about on the economic calendar day. Now, the housing starts is the biggest number of the for sure, the one that can most likely move the market, and that number has been, well, last reading on it was a little disappointing. It was weak. But the forecasters suggest that we'll see a little tick up in that and kind of a little bit of a rebound on that number this month. So you might want to watch that closely. If it does happen to fail or come in poorly, that might affect the market to the downside. So be careful. On the earnings calendar, we only have one company slated to report today. Ticker symbol UTSI, little tiny small cap company. So kind of a nice break in the economic calendar, because it's been a crazy week. Okay, let's look at IWM. IWM dropped that back down below the support level, ran up and tested it as resistance, wasn't able to get through. Looks like this morning it wants to test it again. Whether or not it can break on through, I don't know on that. It's going to be an interesting day for sure. I think we should expect that choppiness to continue. I think we should plan to be cautious and careful. I also expect that the diamonds, they're going to push really hard. The 30 stocks in the diamonds trying to lead the market around now could really start pushing either to break out or break down. I don't know which will occur. I just want to be very watchful in case either one of those happens. Now, the Qs held support nicely yesterday. Dropped down here, kissed that support. We've got this nice little double bottom here. The problem is I don't see this really following through in a big way. It's more of a choppy bounce. This morning it's looking just slightly lower at the open. Anything up in here is going to be a concern as a resistance point. So any bounce back up in here would be a concern and could take us lower. Now, if we look at like some of the big techs, they're all struggling with this area. They're all fighting, trying to hold, and this resistance has certainly played a part in preventing them from getting back up there. And I'm seeing distribution in a lot of the big techs. So if that were to resume more selling in those today, that would make it harder for the market to keep going. If they hold, who knows? The diamonds could actually push us out to new highs, and we could see these techs respond positively and move on higher. So it's hard to make money in this market. Be careful. It's choppy. I think everyone would admit that it's become a lot more difficult here just recently to make money. So my plan for the day is I will be looking for new long trades. But if I do trade them, they will be smaller than normal positions, and I will be looking to take profits on them faster just because of the whip and the chop that's in the market. And I'm not going to rush to any trade. It's more likely that I will maintain what I have right now, which is a lot fewer positions than normal, and be very, very cautious about adding new positions in this current market condition. I'll be slow to add them. So with that in mind, everyone have a great day. It's Friday, and if you have something better to do today, it might be a good day to go do it. Everyone take care of yourselves. Right Way Options. We will be normal time today. Rick is gone today, and so I will be running the room pretty much all day. So we may move right way options over to the hit and run candlesticks room today. We'll see how that goes. If this is the first time you've listened to this information, please subscribe. Please hit that like button on Facebook. I do appreciate it. Follow us, and you can receive this information every day. Everyone have a good one, and I will talk to you all soon.